You've got the money, but not the method. That's the real risk. Hello everyone, it's Chris. In this video, I want to show some examples how a lot of people manage their own stock portfolio. They have a good capital, good stocks, a diversified portfolio, but some people lack framework. They don't have the structure. So in this video, I want to talk about structure, how to structure your portfolio so you finally make a good portfolio, have a good portfolio of winning stocks to finally beat the market. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market and I have averaged a performance of roughly 25% per year, investing in good quality stocks with a concentrated portfolio. And the structure of the portfolio has been one of the key components of my outperforming. Okay, so let's start with the first point. Having capital is different from having a strategy. Most investors I meet have a couple of hundreds of dollars sitting in random assets with no plan. The average age of my audience is roughly 50 years old. You have a good salary, you have a good situation, job is good, the pay is good, and you are building your own portfolio because you want to pick your own stocks. But the majority of people don't have the structure. They invest in stocks because they are watching videos, including my videos, by the way. They are investing in stocks because they scroll on Twitter, they read a Substack article, and they borrow conviction from somebody else. That's a bad way to invest if you want to build your own stock portfolio. Because to beat the market, to have a good performance, you have to know what you're doing. You need conviction. And if you are borrowing conviction from somebody else, what will happen if the stock goes down? If you don't have conviction, you will not know what to do. If, for example, a stock goes down 20%, 30%, borrowed conviction is not helpful at all. So I see a lot of people actually on a weekly basis, they have a good capital, a good portfolio, sometimes millions in dollars for their portfolio, but they don't really know the good process. They don't really track their performance. They don't really know what they own. Most people have a diversified portfolio, too many stocks. My question is, if you have a portfolio of 50 stocks, can you really monitor 50 stocks at the same time? 50 companies, all the earnings reports, all the earnings calls, all the transcripts? The answer is no. You know, the first link in the description is a coaching program, is a website to know more about my coaching program. So you know I help people organize and add more structure in their portfolio to outperform the market. And most people that join the coaching program, they lack the framework, they lack the structure. This is why they need some help. So this is also the goal why I'm making video on this YouTube channel, to help you become a better investor. A diversified portfolio will not help you. Borrowed conviction will not help you. Actually, most people have a random strategy. In 2024, they focus on this. And in 2025, they completely change and they focus on something else. 2026, something else. Every time they change. Why? Because of trends. Why? Because they don't know what they're doing. It's much better to stick with the strategy and stay in your lane. You stay, if you want value plays, you focus on value plays. If you like dividends, you focus on dividend plays. If you like quality, you focus on quality. If you like growth, focus on growth. If you like international investments, you focus on international markets. But most people change strategies over the next 6 months and then change again and again and again, which means you are resetting all your knowledge every couple of months, which is very bad. Okay, so the first point I wanted to make very clear, having capital is way different than having a strategy. You can have as many millions as you want. If you don't know what you're doing, it will be completely useless because you will underperform the market. You will maybe lose money if you don't know what you're doing. Second point, diversification is often just hiding insecurity. Buying a bit of everything, 50 stocks, 100 stocks, is a way to avoid making real decisions. As always, borrowed conviction is not helpful. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Third point, movement doesn't mean progress. You check your portfolio every week, but deep down, you're not sure why you hold anything. If you have a portfolio with too many stocks, you may be tempted to be happy when stocks go up or sad when stocks go down. You will be worried if the stocks are dropping 10%, 20%, what is happening? If you don't know what is happening when the stocks go down, maybe it's a sign you don't really understand the business model. When a stock goes down by 50%, for example, you have to list the reasons why it is going down. For example, I have a couple of examples. It happened to a good friend of mine recently, actually. A good stock is going down by 50%. To really understand if this is inside your circle of competence, you have to know why. Can you list 3 to 5 things why the stock is going down by 50%? If you cannot list 3, 4, 5 things, 5 elements, 5 reasons, maybe you don't really understand the business model. Maybe the stock doesn't deserve to be in your portfolio. Okay? Maybe, they don't deserve to be inside your portfolio and you have to sell the position. Maybe it is the case. You need real conviction, a real framework in your portfolio. And you have to be selective, a harsh grader. If you look at a business and you don't like what you see, dismiss it. Even right now with your portfolio, right? I'm sure if you have a diversified portfolio and you have too many stocks, you can ask a couple of questions. Do I like the business? Do I understand the business model? Is it profitable? Do you have a management with integrity? Is the valuation okay? Do I really know why the stock is down? If you don't know how to answer these questions, maybe you have to sell these stocks, okay? To only keep the best positions in your portfolio. Fourth point, real results come from a simple, proven process with clear filters, clear valuation frameworks, clear conviction. This is how you will get more clarity. I have helped hundreds of people invest in the stock market in the most simplistic way. You don't need complexity in this world. The world is complex enough. You can have a concentrated portfolio with very simple bets, concentrated bets, few bets, but winning bets. You don't need to invest in the next Tesla. You don't need to be a genius. You don't need to brag with your friends because you are invested in this micro cap that will shock the world. Actually, you can invest in MasterCard. You can invest in Berkshire Hathaway. You can invest in Amazon. And maybe if you do this, you will outperform the market. You don't need to be a genius to beat the market, actually, or to have a decent performance in the market. Depending on your age, depending on your risk tolerance, you will find opportunities. And what I have found over the past years is that simplicity is the ultimate sign of a good portfolio. You need stocks that are very simple to explain, companies that are very easy, simple to pitch, a portfolio that is very simple to understand, trends that are very simple to understand. So actually, same thing for the valuation, by the way. You don't need to adjust many things for the valuation. The best valuation tool I have found is the DCF model from Stock Unlock. You have a link in my description to have an affiliate link. It's a discount code for you. You click on the link, it's 10% cheaper. The most basic DCF model I have found. And when I was working in investment funds before as an analyst, we used many complex models in our DCF. We kind of forecasted many things at the same time. We changed the tax rate, the depreciation rate, the free cash flow margin. Useless. Completely useless. It's hard enough to forecast 1 or 2 metrics for the future. Like what will be the growth rate of free cash flow for the next 5 years? You can guesstimate, but it's hard enough to forecast this. So some hedge funds are trying to forecast not one thing, not 2 metrics, not 3 metrics, but 40 metrics at the same time. I know it very well. I did it and I disliked it. So I don't think it is helpful at all to forecast many things at the same time when it comes to the business analysis, but also the valuation. You need to only focus on KPIs that are important for your business. 1, 2, 3, 4 metrics, I would say. If you only focus on 1, 2, 3, 4 metrics, the most important metrics, you will know what really matters for a stock to go up. What are the reasons why your stock goes up? Some metrics are important. The free cash flow per share, for example, very important, and the main reason why stocks go up in the long term. The churn rate depends on the company. You have other metrics, the number of users, the average price per user, average revenue per user. Is this important or not? For every company, it will change. So for all the companies you have in your portfolio right now, if you're in this situation, you can ask the questions, what are the KPIs, key performance indicators, that are important? So you can clearly differentiate what is important, what is not important, so you can dedicate all your time to what is really important. Okay? You need simplicity, clear filters, clear, simple models that will get you the clarity and the conviction to hold stocks for the long term and outperform the market. Point number 5, with a system, you regain control. You stop guessing and start building. And this is what I do with my clients. And my clients, after using my simple framework, they feel relief within 30 days. I have modules, we have calls every week. We are literally doing this, building a simple framework, a simple process, and it works because before joining the coaching program, my clients had a portfolio without much of a structure. They didn't know where to look because you have too much information in this world, too many YouTube videos, too many Twitter posts, you don't know what to look, what is important. And after the coaching program, they know exactly what is important. How to build a focused portfolio, a concentrated portfolio, the smart way, the Warren Buffett way. And guess what? If you are doing this properly with a clear framework, you can increase your performance. And all my clients say the same thing. It's better to have a clear framework that is usable and repeatable for the long term. And actually, in the very long term, it increases your performance because you know exactly what you're doing. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.